Today, we're diving into a conversation about Rivian. The electric vehicle company has been making headlines recently with its stock taking a hit. But is this drop an opportunity for savvy investors? Stick around to find out. Thanks for joining me today, Thomas. Let's get deep into this conversation right off the bat. Rivian doesn't seem to have many investors that are staying in the middle lane. Some people think that this company is on the fast track to bankruptcy. Others are thinking it's another Tesla. There just doesn't seem to be many people who are kind of neutral on this stock. And I know for sure that we're going to get comments on both sides of this, and we're fine with that. We want to hear from you. So be sure to let us know down below. But Thomas, you wrote an article that stirred up chatter on social media, and you had talked about why you thought Rivian was a good buy. So I kind of want to talk about that further here. In fact, you had listed 5 reasons why you thought investors should take a look at Rivian. And that's because shares of Rivian have plummeted more than 20% following a debt offering announcement and a 30% drop from its 2023 highs. And so many investors are kind of wondering if this is the right time to get in. So Thomas, if you would please I'm going to stop talking here and I want you to fill us in for those that haven't had a chance to look at this article yet, which I'll link down below. Tell us about what's going on.
Right. So I think a lot of this decline is an overreaction. Short selling certainly has played a part in it. Sentiment also plays a part, but there's really been no fundamental change in the company's outlook. The debt offering was expected. I think the worst that can be said was a lack of tact. The company has been criticized for just kind of blurting it out there, announcing it sooner than expected. And that took a toll on sentiment. The market had a knee-jerk reaction, and now we're looking at a buying opportunity.
All right, Thomas, before we address the elephant in the room here, I just want to let our viewers know that they can text MarketBeat to 68285 or click the link below, and they'll get free SMS alerts about the stock and others of interest to them. They get to pick and choose there. But back to the elephant, Rivian recently announced a $1.5 billion green debt offering. Many saw this coming, considering the financial demands of scaling up vehicle production. But tell us more about this if you would. And even if investors were aware of this and that this could happen, what does it mean for the stock?
Well, what this means for the stock is a discounted price. The debt offering includes a chance for dilution, but that dilution won't come for 7 or 8 years, I believe. And the 1.5 reduction in market cap, if we do get dilution, is more than 3 times the drop that we saw in the stock price. So I think that the chance of dilution, which is slim, has been more than priced into this market.
So what is the latest update on Rivian's production performance then? Particularly in Q3, and how does that compare to the analyst expectations?
All right, so Q3 was better than expected, and they only reaffirmed guidance for the year. In the eyes of the analysts, that means that Q4 could be weaker than expected, but I think that what this really means is that Q4 guidance is cautious. If the company remains on track, it should be able to exceed the now lowered analyst expectations for Q4 and outperform. And that should be a catalyst for the market.
So, and then this brings up the United Auto Workers strike. You're saying that this could be an opportunity for Rivian because smaller companies like Rivian can become more popular and sell more cars when others aren't. Is there anything else worth mentioning with that?
Well, yeah, this is some chatter that I've been hearing from the analyst community, and that's just the UAW strike is about maintaining workforce and hours, and it's really targeted towards EV production. The OEMs are leaning into EVs. They're looking at automation and AI, reducing workforces and efficiency, and that's really against the UAW's mandate, which is to ensure employment and hours worked. So what I see happening and what the analysts see happening is the OEMs kind of scaling back on their EV plans, which opens the door for EV automakers like Rivian. Because Rivian's already got production underway, it's got a good chance to gain market share.
What can you tell our viewers who are wanting to know more about the technical outlook for Rivian? Are there expectations for a rebound in the near future?
The charts look good for a rebound. The market started putting in a firm bottom. Late last year, it moved higher, it's corrected, and it's retested that bottom. It's retesting support again at a higher level. I think all we need are some positive catalysts to help get the market sentiment back in gear, and that'll help get the market price to start moving higher again.
Okay, so Thomas, all in all, you think it might be a good time to load up on a few more shares of Rivian. Am I correct?
I think now would be a decent time to buy a few more shares. The outlook and the charts do look positive, but I want to point out that there is no guarantee this stock will move higher. It is an EV OEM. It is labor and cash intensive. There are still hurdles to overcome. But for investors with some risk tolerance, I think that this is a viable stock opportunity.
All right, so is Rivian a buy on shaken investor sentiment? The answer isn't clearly cut, but it's essential to consider the long-term potential of the company. So keep an eye out on upcoming developments, especially their Q3 results due in early November. As always, we are here to help you with your research, so leave us a comment down below if you want us to discuss something specific. If you enjoyed this video, please don't forget to like, share, subscribe for more investment insights. Thanks so much for tuning in. We'll see you in the next video, Thomas.
Yeah, see you next time, Lacey.